Okay, today we'll be looking at 10 charts to help us understand what happened to the market on December 20th, and more importantly, what it means going forward. So let's start with this intraday chart from yesterday, showing you, of course, the complete rollover in the afternoon. But I think it's really important to see exactly where it came from a breadth perspective. So it was late about 140 yesterday, still a positive breadth for the major indices, especially for Russell, which had more than 75% of its components higher. And so really, if you look at this from intraday basis from that point, really it was doing what it has been doing over the last number of weeks, where it's oscillating above break-even point to possibly log another small gain. Of course, when things fell apart, momentum really picked up and just squashed basically everything in its sight, right? 90% down days with both the S&P 500 and the NDX. So regardless of what we want to blame it on, it just stood out like a sore thumb, especially in regards to the rest of the days up to this point, where, of course, we had seen nothing like this really only a few times this year. And so overall, it was the first 1% decline, as we know, since October 27th, which ended a streak of 36 straight trading days without one, which ended up being the second longest streak of 2023, right behind the period from late May to August. And so, looking at the table that we track all the time, it was, of course, the first 1% decline of December to go with 1% gain from December, which, of course, happened last week on Fed Day. But overall, right, still 65 for the year, which is really half the amount that we saw in 2022. As we talk about a lot, all this is represented in the fact that market is up still around 20% for the year versus down around 20% for the year last year. So bigger picture, still not a lot of big moves in either way. This is a type of thing that has helped us get to where we are over the last 7 to 8 weeks. But we really want to look at, of course, is this negative reversal. And we know that it's being compared to the one from July 27th for obvious reasons, right? After a big run up, big negative reversal. And so what's going to be very important now is the initial reaction over the next few days. So we're getting it bounced already this morning. Now, don't forget, had two positive sessions following the big negative reversal back in July. And both of these, you may not remember it, but there were new closing highs for the year. But we did not get back above the intraday high from that reversal. And that soon was enough to swing momentum. And we know what happened over the next 3 months, right? So we're going to have to see something different to make this reaction, better than this one, of course. And so, right now, up about not quite 17%, but close to it over just about 7 weeks, which is clearly a very strong clip. But in terms of total performance, still not quite as much as we had from March through the end of July, but again, half the time, and also going back to last summer as well. And so we didn't quite get to that point. But if you look at the biggest rallies we've had now since almost over the last 2 years, this is one of the biggest. So really not that much more to go before all these start to roll over again. So that's the concern, right? Is that you're getting to a point where we've seen rallies like this before, again, over various different time frames, but they haven't gotten much more without a bigger pullback along the way, right? And so that's what the goal or potential is here. And looking at this from a breadth perspective, we look at the S&P 500 components versus their respective 200-day moving averages, 50 and 20, all near extreme levels compared to what we've seen over the last year and a half or so. And, it took a little bit longer for the number of stocks above the 200-day to get back to, the mid 70s, but it's there. We can see just, how it did a very good job of nailing the top twice now in 2023. Now, surprisingly, they tend to hang around longer near extremes as you get down to the shorter moving averages, where, a few weeks or so around the 90% for the 50-day moving average before rolling over last time in August. And of course, a 20 got there really a few weeks ago back in the middle of November has been hanging since. And again, not too different than what we've seen before things roll over. The bottom line is this looks very similar to previous peaks, right? No matter which of these metrics you look at. So for the market to do anything different, these still could come down, but it means that we need some sort of probably elongated sideways action, for the moving average to continue to move higher as stock may move sideways. That's how these ratios could curl lower with the market not rolling over yet. That would be obviously a big difference compared to what we had back in August. And so in terms of drawdowns, right, 1.7%, from the high, basically all yesterday, which is a lot intraday, but in related to how it's been over this year, still one of the lowest, right? Still below 2%, which is again even less than what we saw during the run up from here, and of course, much bigger ones along the way. And so the bottom line is this is small. It could still get much bigger than this and still not put this entire run in jeopardy, right? Still have a lot of leeway here. Still a lot of different ways this could be dealt with without a complete rollover. And so I thought it was interesting to ask the X/Twitter universe what their thoughts were. This put out this survey about 10 minutes before the close yesterday. And because that this is so close to the top here and no one knows how it's going to be bought, most people just right now don't want to do anything different, right? Some, of course, think that this is the end and the top is in. Some are going to buy the dip already, but it looks like most want to see how this initial, pullback from yesterday is dealt with and then adjust accordingly. So, interesting way of doing it. People just want to see how long this can go first. Okay, and so from a pattern perspective, we saw the bigger bullish pattern in play with a target near 5,030, but along the way, we know that other forms of patterns will be constructed. And so two different versions, bullish and bearish, are right now. We know that we get the initial bid here. It could push us back up to the highs relatively quickly. If that fails initially, still have a higher low potential, which can then form something like this, looks like a cup and handle pattern into the new year. If the initial bounce fails, of course, then there's a lower high potential, and this quite clearly could construct a bearish formation on this 60-minute chart here, right? And so that's going to be important to see going forward because we haven't had any sort of bearish formation across any time frame since the lows, and seeing how this is going to be leverage is important because uptrends, we talk about how bullish patterns continue to work, but just as important, bearish patterns continue to fail. And so if we see this even form, break, and then get bought and fail, that would tell us that the bid is still intact. And I think, from a market stat perspective, internals, looking at all of these, of course, we track it just to get a sense of trend every day. One thing we think is going to be important to see is how far we go in terms of new 52-week highs, right? Finally got up to over 100 back on the 14th last week, has been dropping off since, still relatively okay. Now with most everything below their highs, just because of what happened yesterday, we'll see how much further we can get back up to here. Because if the market makes a new high, S&P, maybe there's some of the major indices, but this continues to stay below 107, that could tell us that momentum potentially is fading, and then maybe one of the bearish scenarios we just laid out above could take place, or at least a bigger pullback than what we've seen before. That's it for today. Thanks for checking this out. Don't forget to look at these other videos and subscribe. I'll talk to you soon. Thank you.